Check out natural gas prices. They've been surging, with the benchmark futures contract rising to a 13-year high. Joining us right now to talk energy, the energy complex, oil and beyond, is Helima Croft. She's the head of global commodity strategy at RBC Capital Markets, also a CNBC contributor. And Rob Femmel is the portfolio manager and senior managing director at Tortoise. Helima, let's start with you. Let's talk about this broad overview. We have seen a decided move up both in natural gas and in oil this week. That's happening despite the lockdowns we've seen in China. And I guess we're back to the point where supply is the real issue here.
I mean, we're very focused right now on the situation with the new European sanctions. And when the Europeans have come out and indicated they are indeed looking to wind down imports of crude, that looks like potentially happening in 6 to 12 months. That's 2.2 million barrels of Russian exports to Europe that will now be in the balance. I mean, there's a question like, would India absorb that? But the Europeans have also come out and said, importantly, we're going to make it incredibly difficult to ship this product, to basically ensure your cargoes going into other markets. And so we're not just potentially looking at Europe winding down Russian imports. It may now become more difficult for Asian countries, particularly countries like India, to take Russian barrels.
This has gotten way more complicated and, way beyond what we had originally thought. Rob, you're looking at this as something that's going to last years and years and really affect the way we view all of our energy here.
Yeah, Becky. So energy security has become really, really important right now, and so that's really been elevated. We've got low inventories. Halima's right. We've got a supply problem. We've got energy security. But actually, that's where the U.S. can play a really critical role. The U.S. and Canada actually can play a really important role in enhancing both domestic security, energy security, but also enhancing global energy security as well.
There's a lot of stocks you like in this play. Let's start with Chevron, just because Berkshire Hathaway increased its stake in Chevron greatly over the last quarter, to the point where this is now one of the 4 biggest holdings they have in that portfolio, along with Bank of America and Apple. And I forget what the fourth is. But with that, what are you seeing here that makes Chevron stand out among the pack?
Well, a couple things. So obviously, Mike Wirth's an outstanding CEO, and he's got an outstanding team. But number one, we need more oil and gas production in North America. Chevron's increasing their North American production out of the Permian Basin. That's going to help alleviate the high prices that we have right now. We need more, but the future of energy actually also involves decarbonization. And how does the world decarbonize? And Chevron has demonstrated that not only can they embrace energy transition and decarbonization, but they're going to participate in that as well. And so they're doing a lot of things with renewable natural gas, renewable diesel, carbon capture, other things like that will really help the world decarbonize as well. And oh, by the way, while they do all of this, you get a nice dividend, a dividend yield that's 2 times the S&P 500.
Helima, natural gas has really been the story, because while we're talking about Europe blocking oil coming from Russia, they have not gotten into gas. Explain kind of the backdrop for that and what that could mean for natural gas prices.
I mean, right now, the Europeans are moving on oil because essentially there still is some available supply out there to backfill Russia. Not a lot, though. But in terms of natural gas, I mean, they're obviously concerned about the economic calamity if they were to have to get off of, Russian piped gas immediately. And so they're not moving on gas yet. But the concern, Becky, I would highlight is the Russians have already indicated they will weaponize, exports into Europe. They have already cut off Poland, Bulgaria. A number of European companies are coming up on their payments deadline to Gazprom. And right now, the EU is telling these companies they cannot pay in rubles. So the question is, are we going to see cascading cutoffs of European markets? And again, there is no easy replacement product out there. There's no SPR for gas. And yes, we've had more U.S. LNG cargoes going into Europe, but there's just not anything really left in the system that could backfill a major Russian gas cutoff right now.